United Health Group is one of the largest healthcare companies in the world, having generated over $300 billion in annual revenue. But despite that, in recent months the stock has pulled back, raising the question, is United Health actually a good stock pick? Are they undervalued? In this video, I'm going to break down the business, the financials, the risk, and whether or not I think it's currently a buy. Alright, so let's start with a quick overview of the company. Being one of the largest healthcare companies in the United States, they serve millions of customers through both insurance and healthcare services. The business is split into two major segments. The first is United Healthcare, which provides the health insurance to individuals, employers, and government programs. This provides almost Medicare and Medicaid. Second is Optum, which focuses on their healthcare services, pharmacy benefits, and the data analytics for the healthcare industry. Together, they have generated over $370 billion in revenue, making United Health one of the largest companies in the entire healthcare sector. Alright, so first I'm going to talk about healthcare industry growth just in general. The industry is growing, partially due to the aging population. Americans are getting older and older and having to spend more of their money as part of GDP on healthcare due to the rising prices. Going into that, healthcare costs are actually rising themselves. This is partially due to the cut in Medicare and Medicaid, but healthcare is getting more expensive in general. While this could be bad for the average American or those who are most affected by this, it does provide a powerful long-term tailwind for the company, which United Health Group is making full advantage of, and this could therefore boost their stock in the near future. Now, within the healthcare industry, United Health Group has built themselves a massive advantage. Part of this is due to the fact that they're not only the largest health insurer, but they also are one of the most highly vertically integrated healthcare industries. Part of this is due to their ownership of both United Healthcare and Optum, which gives them access to both insurance plans, pharmacy benefits, and healthcare data. United Health Group's structure has helped them attain extremely consistent growth. The revenue has grown dramatically over the last decade, and earnings have also steadily increased. Looking at the graph, you can see that there is still a decent bit of room of profit over the cost. And due to United Health Group expanding their insurance and their healthcare services, you can see the difference between United Healthcare and Optum itself, which is both part of the same United Health Group. Alright, so now let's take a look at the company's financial performance. So one of the most important aspects is obviously its consistent revenue growth. Over the past decade, United Health has steadily increased their revenue. This is partially due to more people enrolling in their insurance plans, but also their Optum healthcare services. The business has been expanding. The strong growth reflects how the demand for healthcare is rising and how the company's position gave it the ability to increase their revenue quarter over quarter. Moving on from revenue, another important aspect we're going to have to take a look at is the company's earnings per share. So looking at the history of United Health, we can actually see that their earnings have typically increased quarter over quarter and year over year, which is pretty good for a healthcare company of their size. But in recent months, they seem to have experienced some decline, which is probably due to certain industry headwinds that have been affecting them. If they're able to reverse this, then there's a good opportunity that now if you buy at this cheap price, you can get a good price reward as the earnings go back up. Alright, so while those financials were important, something else we got to take a look at is actually the price over earnings itself. If you don't know, price over earnings is essentially a good way of telling a stock's valuation. Anything below 10 is quite undervalued, but the issue with that is they don't see much growth for that stock. Anything above, it depends on the company, but 50 or above is a company that's maybe overvalued but growing. Anyways, United Health itself has a P of 21. So this is a bit lower than recent, and it's actually a bit higher historically. But for a healthcare company like United Health, this is actually pretty low, meaning there is the potential for some stock growth potentially. Now looking ahead, we have to determine if United Health actually has any growth opportunities. My personal opinion, they do. As healthcare demand continues to increase, the population continues to age, and their Optum division actually is continuing to expand into further clients and expanding their influence globally. If this continues to grow and earnings is able to grow, then I think the current valuation could increase for the stock. Okay, so something we have to address is the potential risks for United Health Group. Being a healthcare company, the rising healthcare costs can actually hurt them too, because if medical equipment is becoming more expensive, it'll cut into their margins, resulting in a loss of earnings. And then also political pressure. With so much things going on now with the Affordable Care Act and all of the politicians talking about how sometimes they're going to try to lower the price of certain medicines, but it's a very volatile environment. So politically, they have to be careful just to not just lose their margins and be able to operate as a company regardless of the political environment. Now, time for the most important part. What's the final verdict? Looking at the stock, in recent years, it has been extremely high with prices in the 500s, experienced a major drop in mid-2025 down to 200s, currently sitting almost near a low at 281. So part of the question is, does it have the opportunity to go back up? The average analyst prediction is 357, so that does give it quite a bit of margin to increase. Most of the time, there's not any really predictions lower than 280. So I'd personally say that if United Health can get themselves back on track with their earnings, that they do have the potential to go back up to a $400 stock, but investors should be wary that many things can happen and that it's not guaranteed, but overall I'd lean more towards bullish for this stock. Alright, thanks for watching. If you have any questions, let me know in the comments and I'll see if I can answer those for you.